Hey guys, Akil here. Welcome back to another Trading Edge video, your weekly look around the markets. If you guys are brand new, thanks for checking out the channel. Do lots of videos and lots of content here, but this is a weekend video that I've been doing for I don't know how many years now, where I take you around the markets and show you the top trading ideas that are on my radar for the week to come. This week, I'm also going to give you an update on the DKC strategy that I just started trading last week as well. And well, if you want to hear about the harsh realities of trading, make sure you tune into the very end because this week was not the best. By the way, if you guys are new and you want to know a little bit more about me instead of kind of wasting your time on this video giving you my story, make sure you check out this recent podcast interview that I did. It was called, something like My Journey from Janitor to $250,000 Funded in 1 year. I'll put a link below in the show notes. I'll put a thumbnail up top as well. But it was a great interview that I did with Calvin, the trader, kind of sharing my story and kind of the hardships of my journey from struggling and overconfident trader to consistently profitable trader, and of course the ups and downs that happen in between. So make sure you check that out. Give my boy Calvin some support. All right, let's hop into the thing today. We're going to start with the euro dollar. And the euro dollar is interesting because this one's given us a little bit of a mixed bag, especially if you're someone that's into fundamental analysis. So just to start on a little bit of the fundamental side, and here at Tier 1 Trading, we are technicals first, technicals first, technicals first. All of our decisions are made off of the technicals, but we do understand that fundamentals do play a role in the market, either for keeping ourselves safe or putting ourselves in position where we can make more profit on certain opportunities. So we always keep an ear open. And fundamentals have been crazy lately. That's why we call them fundamentals. And by lately, I mean really since the year 2000. And most recently, we've seen a little bit of strength return to the dollar. And it's not necessarily for dollar strength type reasons. It's really because things aren't as bad as what the markets thought they would be. So it's kind of like one of those backhand compliments, I guess. Nonetheless, we want to take that into account when we look at our trading opportunity here, because I'm going to show you two different opportunities, all depending on which side of the market that you decide to be on. Now, if you don't know what side of the market you should be on, this is why you need to have a process, right? Here at Tier 1 Trading, we teach a process called IPDE: identify, predict, decide, execute. It's all based off the technicals, where we want to identify what the market is doing, what the market has done. We have very specific rules for how we interpret something based on if structure holds or structure is violated or structure is tested. Based on what we identify, we then make a directional prediction. After we make our directional prediction, we then want to decide how or if we can get involved in the opportunity. And if the answer is yes, if we check that box, well, then it comes down to pulling the trigger if we get our entry reason. So from a technical perspective here, you can see that price ended the week with a higher high, higher close above our previous level of structure, right? That big red box that you see at the top of your screen, that's one of our VS1 levels. This is one of the indicators that we give you guys on the platform. It represents a previous level of structure resistance, and you can see price has clearly broken and closed above it. If we were to zoom out on our daily chart here as well, you can see that our next level of structure is a little bit higher as well. So there is room to continue higher here on the euro dollar, right below the 112 even handle, right? So we can make a prediction that, hey, there's a potential trend continuation opportunity here. We go down to a lower time frame, our 240. You can see the most recent move was a spike down to our previous level of structure right here, where once again we held this level of structure. So continuation traders, you're looking in this area right here, either on the 4-hour chart or maybe one more time frame down on the hourly for a potential buying opportunity. And if we do go one more time frame down to the hourly, you can see we put in a nice reversal combination here, right? This is called a 3-bar reversal. So we have our high Momo candle, right? Our high momentum candle is fancy word for a big bearish candle here. We then have our doji candle, which is an indecision candle. So the bulls and the buy, or the bulls and the bears kind of back and forth deciding who wants to take control. And then we have our confirmation candle with our higher high, higher close. Again, this is called a 3-bar reversal, a classic entry, or even just in general, a classic charting pattern in the market. So this could have been a nice entry for you right here. Stops below the violation point, which are the lows right here, and then looking for an opportunity to trade it up back to the high. So you're looking at something where if you did get involved in right here, if you do wait for like a double bottom or something like that, stops are going to be below this level. Your entry will be anywhere between here if you entered on at market, or somewhere in here wherever the double bottom forms, and then your target's looking at a retest of the highs up here, so you can see a really good opportunity. If you are someone that has the opposite opinion, let's say a bearish opportunity, well, I don't see any reason to sell right now. But what you need to do is wait for confirmation. Again, as I mentioned earlier, we have those rules on if certain levels are violated, then we change our outlook on the market. So if price can take out these lows, and notice that these lows were the same area that, or same level that we had stops below for the buying opportunity. If price can take out those lows, right, we may have what's called like a little head and shoulders pattern right here, where the market came up, created what's called a left shoulder, spiked a little bit higher, came back down, retested the neckline. This little hump right here would be a symmetrical right shoulder, right? Left shoulder right here, right shoulder right here. And if we were able to push lower, there's an opportunity to trade this thing down right to our previous inside level of structure right here. So this big blue box, another VS1 level, the inside level of that zone looks ripe for an opportunity. I'm just going to bring some more tools on here to see if we can get any confirmation. Let's bring a Fibonacci retracement, perhaps, from our swing low to our swing high. Boom, you can see a 618 Fibonacci retracement right around that level. I'm also going to bring in some volume here as well. Let's take same swing high, or excuse me, swing low to swing high right here. See if there's any significant volume spikes that stand out to us. You can see high volume right here at the shoulder area, reduced volume here, which is good. Typically, that's a sign of smooth sailing. And then you can see the volume picks up right around our previous level of structure and our 618 as well. Bring one more thing in, just curious if we have a Fibonacci extension. Swing high to swing low and back up. Boom. A little bit above that level. Not quite the same type of confluence. We have a 1414 in there. It doesn't really mean too much for me. But yeah, nice confluence in this area. So as a buyer, what I would look for, if you're not involved already, is confirmation of a double bottom and a chance to trade this up. As a seller, what you need to wait for is a violation of these lows, this previous level of structure, and then a chance to sell it down. Next up is going to be the Euro New Zealand. We're here on the hourly chart. This is another counter trend structure-based trade. You can see price has rallied up to retest our previous VS1 level, our structure resistance, or our previous structure resistance. And this is a basic short opportunity. Now, I would warn you of this. Although price action has held at this VS1 level, we actually don't have any negative signs, so any bearish signs. And here's what I mean. If I take this thing away for a second and we look at the candlestick wicks, do we see how the tails are to the downside or the legs are to the downside? Well, that shows us a bearish rejection, meaning that the bears tried to push down and then they were defeated and price closed higher. The bear tries to push down, they were defeated, price closes higher. We saw that even on this red candle, right? Although this is looked at as, or I guess technically a bearish candle, I still look at this as a very bullish sign because the story of this candle tells me that price action was pushed down and we closed higher. So what I would look for here as far as shorts go is some confirmation. And the confirmation I would want to see is I would want to see these lows taken out. If price action can take out these lows, then I'd be much more interested in a short, whether you're trading it as a breakout or whether you're looking for another retest and extension down. That's going to be up to you and your personal preference, right? Again, IPDE, identify, predict, decide. That's going to be up to you and the rules in your trading plan. But I would look for that confirmation based on just the individual candlesticks and really I guess the cluster of individual candlesticks that have formed at this level. Target wise, we can look at a retest of these lows right here, right? Previous inside structure looking left, a little bit of a structure shelf right here. Looks to line up probably right below a 50%. Fibonacci retracement, swing low to swing high. Yep, you can see a 50% retracement right there. So we have two things, the 176 even handle right here to 50% retracement. I think that's a nice conservative level to look for targets. I certainly wouldn't shoot for anything below the 618. So potential structure-based short opportunity here on the Euro New Zealand 1 hour. Next up, we're looking at the Canada yen here on the daily chart, and price action has approached an interesting level. One, we do have another VS1 level up here, so another previous level of structure resistance. I've been talking about these all day because I'm using the Ninja charts today. If you do want to check out this indicator, by the way, it is available with your trial membership. Just head over to www.tier1trading.com. Check out that risk-free trial membership, 14 days on the platform, training courses, software, live sessions, whatever else I'm supposed to say, but no strings attached. There's no auto bill or anything like that. Just come learn for 14 days. There's my sales pitch. Not really good at it, but every once in a while I got to put it in there. But we do have two things here. We have this VS1 level, and then we also have our even handled number, our psychological number here. And what's interesting here on the daily is I do think we can go a little bit higher. So this is going to be more of a intermediate lower time frame trading opportunity as the week begins. But here's what I think. So we have our VS1 level showing us that, hey, this is a zone of previous structure resistance. The question that we need to then answer for ourselves is, where in that zone is price likely to go to? Is it likely to go to just the very bottom? Is it likely to spike the very top, or somewhere in the middle? And this is where we can use our other tools of analysis. So I'm going to do two things here. First, I'm going to take my Fibonacci extension tool from the swing low to the swing high right here and back down. And you can see that's going to give me a 127 Fibonacci extension right here. I'm going to take my Fibonacci extension tool and invert it. So I'm going to go from right to left instead of our usual left to right and do a Fibonacci inversion of this retracement right here. And what I hope happens, it looks like it might, is that we get that 1618 Fibonacci retracement lining up right with or right near that 1618 Fibonacci extension or inversion, lining up right with that other one. And you can see right around that same area, right? So right around that 100 dash or dot 50 level. And I think that's a good area to predict if price is going to go to this VS1 level or this previous level of structure resistance, that this is the level it would come to. It does line up with our previous highest closes right here as well, which is a positive sign. So we then want to go down to our lower time frame. We'll go down to the 4 hour. We can go down to a 60-minute as well. And you can start to see where the opportunity lays, right? Or lays? Is. You start to see where the opportunity is, right? I trade. I don't speak well for a living. But you can see that on our last rally up here, price found the top. We retraced. We did this little channel here. You remember this from the live trading room where we created this little structure shelf, and then boom, we popped out of that structure shelf, another VS1 level forming. Previous level of structure resistance, once violated, should act as support. Maybe not should, but we would expect it to act as support. We always want to wait for proof. So if we get a pullback back into our previous level of resistance turn support, that could be the opportunity to look for that extension higher up to this level. So at first glance, it looks like we're very close to that ultimate destination and there may be not any meat left on the bone. But if we do get that pullback, let's say back in the 99.50s, and we're looking for 150s right here, that's about 100 pips of potential profit. So keep an eye on this on your intraday timeframes, 4 hour chart, hourly chart, and of course, any day trading chart that you may be looking at as well. Next, we're going to go to our good friend, the Dixie, the dollar index. And again, you can see the dollar strength to end the week on the negative news that wasn't quite as negative as what everyone thought it was going to be. The markets are so interesting. That's why we call them fundamentals, right? Because bad news is sometimes good and good news is sometimes bad. And you can drive yourself crazy trying to make these predictions based off news events because they are based off of our reactions. Again, not poo-pooing any type of fundamental traders at all. I'm good friends with many fundamental traders, but if you ask any of them, they will tell you it is extremely hard, and you certainly want to have a technical base no matter what, because this is going to give us the most consistent feedback as far as understanding what the market is doing and how the market is reacting, even when it comes to news events. But what we have here on the Dixie is a violation, right? So this was our double bottom that we looked at during the week. We had that violation, then we kind of hung around this level, then we popped up. What we did was we violated our previous level of structure, right? If we look left, we'll remember this level right here, previous structure support, came back to test it, previous structure support, broke past it, Boom, retested it again, and I know it doesn't actually touch, but these things aren't exact. If you come into the market thinking everything's going to be exact on a dime, you're going to become a very frustrated trader, right? There are close enoughs and zones and all that fun stuff. Unbutton the top button a little bit, Mr. and Mrs. Technical Trader, right? But you can see previous structure support after violated became resistance on the retest, then we came down. We then violated it once again right here. You can see we took out the highs. We're now coming back down to retest it. Again, previous structure support, which was violated, and turned to resistance, which is violated again. We're now looking at it to act as support. Look for a hold here and an opportunity to buy it up to where? Boom, our previous level of structure looking left. This is why it's not a bad idea to keep these notes on your chart, right? Especially when you're dealing with structure, support, and resistance, because a level that was important in the past will probably be important in the future. And as long as you know where that's at, it gives a massive clue on where to look for price destinations and price reactions. Speaking of reactions, I'm shocked I didn't have a worse reaction to my performance with the DKC strategy this week. I'll walk you through it in a second, update you on how the week went and how the overall picture looks as well. Let me just load up the charts real quick. So after a pretty good week one of trading the DKC live, week two was a little bit of a sufferfest, and we suffered a very large losing streak. At one point, I took 8 losing trades in a row. Now, with that being said, this was expected. Obviously, you don't want it to happen, but when we did our analysis before trading it live, we took a look at everything, and one of the things that stood out was the long losing streaks, the long and consistent losing streaks, I should say, that this strategy takes on. And that's a big warning sign to any trader. One, am I willing to deal with losing streaks of 10 plus on a regular basis? And you have to answer that question and say either yes, I am, or no, I'm not. And if the answer is no, you got to do something about it. But what helps with having that data is that it also mentally prepares you. So if you think about any drawdown that you've ever taken, right, they typically put you in this dark place where you start losing confidence, you start thinking you're doing something wrong, or the system or the strategy is broken, and all these evil thoughts enter your head. But when you have the data and when you can fall back on your data and say, hey, what's happening live isn't that different than what happened during my historical testing, and the results from my historical testing still led to me deciding to trade it, then it gives you a little bit of comfort. Now, no, it doesn't feel good, right? No one wants to lose like that, but you understand that it's part of the game. Just like being an athlete, you're going to have bad games. Michael Jordan had games where he missed a lot of shots, but he kept taking them because he knew that over time he would revert to the mean. So it was just one of those weeks in the market for us with the DKC. 10 trades, 30% hit rate. About -2% for the week. So a rough week, but nothing that destroyed an account. And that's the beauty of having a very small risk per trade. So overall, for the 2-week total, that puts us at about 17 trades. Not about, it puts us at 17 trades, 35% win percentage, which is slightly lower than what's expected from the strategy. Average win 1.75, average loss is always going to be 1, and a total back in the negative, right below the water, of 0.49%. So after a disastrous week, the account is still surviving, and this is the difference between kind of professional trading and rookie gambling, where anyone can do great when their system and strategy is on a winning streak. But what happens with a lot of rookie gamblers is that when their system or strategy is on a losing streak, they go crazy, they make it worse, they don't know how to deal with it, they start trading larger to try to make it back, and they end up blowing an account. A professional just follows the plan consistently and survives the storm. And you can see that a pretty rough week. We're still at a basically break even. So we're surviving it, and hopefully next week brings more of what we saw in week one. And of course, I'll keep you guys updated. Hope you guys enjoyed. Hey, if you haven't done so already, make sure you check out the Trading Coach podcast. We had a very interesting episode this week, which kind of falls hand in hand with the strategy stuff, where we spoke about what type of trading strategy causes more emotions. A discretionary one where you have kind of freedom to do what you want, or more of a systems and a mechanical one where you're following a strict black or white set of rules. I think you're going to find the answer very interesting, so make sure you check it out. It's a video version as well. So if you're watching or listening on Spotify, Spotify, you get to see my beautiful face, which is, I don't know if that's a good thing or a bad thing. But anyway, check it out, the Trading Coach Podcast. 3 new episodes each week available on your favorite podcasting app. Make sure you rate, review, and subscribe. And I'll see you guys next week with another episode of the Trading Edge Weekend Outlook.